Trump just made one post and created one of the biggest stock market days in history. And I'm going to show you how to explain that to your friends. Of course, without sounding like a finance bro. But first, let's look at the signal grid so you don't think I'm getting all political on you. All right. So the signal grid talks about is it about politics or is it about policy? Well, in this video, it's neither. We're only going to talk about the impact and the opportunity, meaning what happened and how you can react to it. That's all we're going to talk about. What exactly happened and how you can react to it, meaning I'm going to show you how we can analyze exactly what happened. That's going to lead to some very specific insights and exactly what you need to know. So that's exactly what we're going to talk about. So let's get right into it and break down what happened and what you need to know overall. So on Wednesday, April 9th, the stock market went into a full rocket ship. The S&P 500 skyrocketed. NASDAQ surged to one of its best days ever. The Dow popped off. Can't even remember how many points. And all of this happened just hours after one post on social media. So what changed? President Trump announced a 90-day pause on tariffs for most countries except China. But at the same time, he jacked up tariffs for China to 125%. So on one side, we have relief. On the other side, we have escalation. But the market's focused on this one word, pause. And look what happened. It's crazy. So let's kind of zoom in a little bit. For the last week, the markets were just on edge, selling off hard, worried about like a full-blown trade war, which actually started happening. And then with just one announcement, the tone flipped. That 90-day pause gave the big investors a breather. It gave them the room to reposition. And most importantly, it gave them hope that, there are some controls when things start to spiral out of control. You could feel it in every part of the market. The tech stocks mainly exploded. NVIDIA, AMD, Intel all jumped like 13 to 15%. Small caps, which are smaller companies that are growth focused, were getting crushed, which they normally do in a recessionary fair environment. They bounced 7 to 10%. Crude oil surged. Treasury yields spiked. So the Fed's kind of trying to figure out, hey, we don't have to come to rescue you anymore. And sectors across the board were turned green. The move was massive. But the crazy part is, it wasn't even across the board. Under the surface, most stocks didn't even rally that hard. It was actually a few big tech giants that have huge market caps doing most of the heavy lifting. It's kind of like when one guy at the gym starts like deadlifting 500 pounds and suddenly everyone else looks stronger just because they're standing next to him, right? Well, it happens to me. Well, what does it mean? This means that in this moment shows how fragile the current market really is. The whole thing turned on one phrase, a 90-day pause. It wasn't policy. It wasn't legislation. It wasn't even a press conference. It was a social media post. And suddenly the market adds trillions of dollars in value. That's insane. This is why we have to figure out what's important right now. Right now, the markets are not reacting to fundamentals. They're not reacting to logic, and they're reacting to headlines. That's when the market is heavily headline driven. When the market's heavily headline driven, you know what happens? It feels just like relief. It gets twitchy. It overcorrects, and it runs on emotion. So this rally, exactly what was it about? It was not about logic. It was more like relief. And that's what's interesting. It's like when your teacher at school cancels a pop quiz and suddenly the whole class gets chatty all over again. But that doesn't mean the quiz is put off forever. It's coming back. You know that. Same here. There's still pressure in the system. Tariffs on China are now higher than ever. Inflation data is definitely coming. The Treasury yields are spiking, so the Fed's going to be in a tight spot. And the Fed minutes on that are kind of like on deck. So, yeah, market soared, but it soared into what? A bunch of uncertainty. Just feeling relief that you got to pause. You got to break. And that's crazy if you think about it. So how do you think about it? I would use kind of like this lens and to make sense of all of this. So let me give you 3 big ideas. Idea number 1 is markets move with emotions first and facts later, especially when the leader of the free world is tweeting one post. This was a relief bounce, not a full trend change. The emotional pressure just dropped, so the prices popped. That's not the same as long-term safety, right? So here's number 2. We got to know what's real and what's noise. Like, what is real and what's noise? One post doesn't change the deeper economic picture. All of this stuff is coming. It just gives everyone a moment to kind of catch their breath. Now, don't get me wrong, that's good, but we all have to agree that it's temporary. And here's number three, you got to kind of watch what's rising and what's not. Big tech, in this case, with NASDAQ's highest lift, lifted the whole market. But most other stocks, they didn't nearly move as much. Uh, it's like when LeBron scores 50 points and the team wins, but the rest of the squad puts up 4 points. It works, but it's not sustainable, right? That's what went down. That's what went down. And you can now break it down for anyone without sounding like a finance bro.